Hello everyone, welcome to another week of dollar INR. Lot of volatility in the dollar INR exchange rate. Rupee is continuously weakening. Let's try and make some sense out of it and how to hedge. Let's try and make some reasonable, prudent hedging decisions. Okay, I want to show you two charts today. I have shown this chart before, but I want to come back to this to show how disparate or how nonsensical nonsensical the markets have become. Okay, so here is a chart I want to show you. Okay, so if you see on the right y axis, the vertical axis, the right y axis, this is the dollar index. Okay, so this line, the red and green candles are dollar index, and if you look at this gray and white candles is the dollar INR, and dollar INR is scaled on the left y axis. Okay, this is scaled here, dollar INR, and dollar index is scaled on the right y axis. So this is gray and white candles, this is red and green candles. Okay, so if you look at history, if you look from here till here, this is a good 1.5 years, we see very high positive correlation. Okay, so this is the 50 line, so very high positive correlation, which means dollar index going higher, dollar INR also goes higher, which is very logical and rational. Okay, but look what has happened here. Okay, here, this particular place where the correlation has completely broken down. What has happened is dollar index has declined from 99.50 to 96, about 3.5% decline in just about 2-3 weeks time, and in that period the dollar INR has gone up by almost 1 rupee. Okay, it was around 90.50, 90.40, now it is around 91.90. Okay, so 1.5 rupee jump at a time when the dollar is weak, the dollar index is weak, dollar is weak, but against INR dollar is strong. Okay, so that is the big nonsensical thing that I was trying to tell, how the markets have completely detached, the dollar INR markets have completely detached from the dollar index, which is very unusual, very unlikely. Now the next question is, will this unusual behavior continue or will it come back to the usual behavior? That is a $1 billion question. Okay, so that is the nonsensical thing that is happening. Let me come back to the dollar INR chart. I want to show you how you can make sense out of it. Okay, so this is the dollar INR chart. We are very familiar with it. We see a very clear cut uptrend here. Okay, sorry, let me get it back. Okay, very clear cut uptrend here. Okay, the dollar going higher, rupee getting weaker, highlighted by this white dotted upward sloping trend channel. Okay, I want to show you these moving averages and also want to show you the extreme. Okay, current prices are substantially higher than the moving averages. What is shown here, very high price variance, very high movement from the normal long term, short term and medium term moving averages. Okay, another thing I want to look at is this particular thing, what we call as the ADX, directional index. It's a very good indicator and it also tells about price extremes. So if you look at this blue line, okay, it very rarely goes above 37.40. Okay, 40 is a level which is very rare, and if you see in this 1.5 years of period, it has gone above 40 only once. Okay, and above 35 probably twice or thrice. So it's a rare occurrence, and currently the ADX is around 37.38. Okay, so momentum indicators no doubt has reached a price extreme. Prices have substantially moved away from the moving averages. So all indicators, technical indicators, in suggesting that the price has reached an extreme, and I showed you with the correlation with the dollar index, the correlation is completely broken down. So obviously it is not a normal market scenario. Okay, it's not a normal market. And what we also learn from history is that this unusual non-normal market does not stay for too long. Okay, so the usual assumption is that normality should come back. Okay, these price extremes should correct either if the spot dollar INR spot comes down, or the dollar index going higher, whichever way. But the bottom line is it's a non-normal period, unusual period. So you need to look at some hedging decisions which are unusual. You cannot look to take the usual forward contracts to protect your risk. Okay, so all dollar exporters, even though the levels are very good, you want to lock in such high prices, you can do some bit of forwards, but remember that rupee weakening is very unusual. I showed you the correlation with dollar index, very unusual. So the spot might go higher than your forward rate on by the maturity it comes. Okay, so forwards should be kept to a very small quantities, but if you want to lock in and you want to capitalize on very good rates and do not care about where the market is going, I am locking in very good rates, that is also a very logical and sensible decision. You can look to lock in and do some more forwards. But the most important hedging instrument at one point of time, at current time, is a vanilla option. I have explained vanilla options before. If you do a 1 month option where the strike price is equal to the forward rate, you have about 45 paisa option premium. If you do a 2 month option, it comes to around 65-70 paisa option premium. So options are a much better instrument for all dollar exporters. You can do forwards, and also you should use options to diversify risk. Dollar importers, the question is slightly more difficult. Okay, I have pointed out this, this dashed line, which is the 25-day moving average. We have seen prices coming to this moving average and then going higher. Here also it came here, held the moving average, and then it has gone higher. So there is a tendency that prices might come to that moving average level, and that level currently is around 90.65, 90.70. Okay, so either you can wait till that level or you can start doing small amount of forwards. Okay, vanilla options will also help you, but I think in a time when dollar is consistently going higher and non-normality time, you can look to do some bit of forwards, probably lower level, and look at these levels to market time, 90.60, 90.70, and probably do more of forwards at those rates. But you can also look to do some vanilla options. Okay, so very unusual, non-normal time. So obviously for extraordinary situations you will need to do extraordinary solutions. So all risk management strategies will have some bit of an unusual tinge at this point of time. Okay, so that is it from my side on dollar INR. Have a great weekend ahead.